Okay, so welcome everyone to another weekly recap with Travis and I. I'm the co-trainer. Travis is he's the educator, really, is what it comes down to. So we're gonna make this. I'm definitely gonna be quick. I'm just gonna cover the market real quick. I'll cover my existing trades. Some of this has changed. I'll kind of go over what my trade journal is for this week, what I'm doing. Some standard disclaimers though, again, remember this is all for educational purposes only. We are not giving you investment advice. Please consult a professional before ever investing any money in any kind of investment vehicle, whether it's the stock market, real estate. All the stuff we talk about is for educational purposes only. The other thing is, if you like the video, give it a thumbs up on YouTube and subscribe to our channel so you get instant notification when we put out new videos, because we always put out new and fresh content. And if you have any comments, leave them down below and we will respond to you. So I'm going to start right off and just kind of take a look at what I got here on the screen that you guys can see is Yahoo. Yahoo is a really good platform to be able to compare two different charts. So I have DIA and SPY. And the only reason I brought this up was because the other day, or actually this morning, I had noticed that DIA had triggered a weekly red in Market Club. So I figured SPY was going to be right behind it. And it turns out SPY triggered today for a red weekly. So that tells us, if you guys don't know anything about Market Club, that just basically gives us, it's a pretty reliable signal that tells us what the market's going to do or what a stock is going to do over a specific time frame. In this case, at least for the intermediate time frame, it's going to go down. And you can kind of see that SPY, DIA, you can see the whole S&P is in a major pullback. It was at a negative 2%. I don't know what it's at now. So just something to keep mindful of. For us, what I did was I had one credit spread still on SPY that I needed to close out. And if we go, this was my trade journal from this morning that I put up. If you look, I still have one SPY vertical as it hadn't hit the 80% profit mark yet, and I was going to lean to close out early. You can see what I put there. You know, DIA just triggered a red weekly. I expected SPY to follow suit. SPY did. And when it triggered that red weekly, I exited the trade. Unfortunately, I didn't see a significant profit, but I did see a profit, and that's the good news. I didn't lose any money. What I did end up doing too, real quick, is I did set up a bear call credit spread 3 days real quick to take advantage of this pullback. I'm only risking a small dollar figure, and the reason I did it, and Travis and I were just talking about it, I'm not comfortable with them. So real small dollar figure, just place the trade, get comfortable. Even if I lose money, it's not the end of the world. Overall, the way I'm looking for my my performance on the weekly performance for May, I'm looking really, really good. So I got a $200. This is my Apple call. I could sell it for $200, and this would be my performance for the month of May. So I'm in good shape for the month of May. The only other thing I was going to really cover, so as far as the market goes, do I know if it's going to continue down? I don't. I have no idea. As we always say, we can't predict what the market's going to do. We just trade based on what it's telling us right now. It's telling us, hey, I'm done climbing this mountain for a while. I'm going to take a little breather, and we'll have to wait and see. So for me, that's what I was going to do. I'm just going to kind of sit through the week and watch things. If things turn around and I get any entry signals, then I'll go ahead and place trades. What I'm going to focus on, the way I set up my spreadsheet, thanks to Travis, is I'm going to focus on my June and July timeframe, because my May is pretty much done. I hit my goal. I want to make 2 to 4%. It's a really lofty goal, but I think it's one that I can attain. And I hit it for May. So I don't really need to focus on any trades for May anymore. So I'm going to focus on June, and you can see July is already at a loss thanks to Nike and my brilliant performance with Nike. The bad news is Travis traded Nike too, because he said, oh, Peter's trading it, I'll trade it, and he took a loss too. Mine was a credit spread, but Nike triggered a red weekly, so I exited the trade. It was a 45% loss. I waited till after amateur hour. If I had waited till near the end of the trading day, I probably could have reduced that loss, but I'm really trying to focus on being an if this, then that kind of trader. And it just takes all the emotion out of it. It's very difficult to take emotion completely out of your trade, but if you just keep focusing on it that way, eventually muscle memory takes over and you don't think about it. So Apple was at a 65% profit. It's not anymore. Apple has dropped like a rock as well. But until it gives me a red weekly, I'm not going to exit my call option. And here's the good news. That call option, no matter what I exit it at, is all profit because I paid for it with my other call option that I exited at 100% profit last week. So that's good news. The SPY I'm out of, and I do have that new bear call that will expire. And I did talk about that. If SPY triggers a red weekly, I may even do a weekly bear call to recoup some of my loss. I didn't lose any money, so I did this anyway, and it kind of recouped some of the potential gain I was looking for. And again, my goal is to work on my July revenue as I'm currently at a $300 loss. May is still a top performing month for me at just over 3%. It's just under now. But it's probably, with my call option, it'll probably be about 3%. And then the goal for June, July is to get to 3 to 4%. Really, that goal margin is 2 to 4, but 3 to 4% is what I'm going to really push for. And we'll see if we hit it. And that is it. Did I have anything else, Travis? I don't think I did. I made you the presenter.
All right, so let's go ahead and show you the correct screen here. I have the market pulled up. Let me know if you can see that, Peter.
I see it.
All right, good. So I'm not going to cover it. Peter already covered it. Hey, Success Academy members, you already know. I've already taught you this. We've already said, hey, I sent an email Friday saying, hey, we always have to be battle ready. You know, we always have to be some kind of healthy paranoid because we never know when this 10% correction is going to happen. So all of you should have been prepared. I have insurance in place, so I need to add a little bit more now that we got a weekly trade triangle on Market Club, just to offset what I'm losing on my bullish trades. Bullish meaning I make money when the market goes up. Now, with that being said, my lesson today is custom made for Peter. I didn't know it was going to be custom made for Peter, but I said, Peter, I'm going to show everybody how we pay for our cruise via the stock market, or how the stock market paid for our cruise. Comes to find out, he's going on a cruise. So Peter can model potentially what I did, and hopefully we can celebrate here in a few months. And when Peter comes on this recap and be like, hey, you know, I followed the blueprint, I followed the option profit formula, and my cruise is paid for. So what do I mean by the option profit formula? This is the formula my mentors gave me. They didn't call it the option profit formula. They called it like a freedom formula. Pretty much you're going to take your income and you're going to buy or accumulate assets. Then those assets produce income. And that income is what we call income freedom, financial freedom, or financial independence. The goal is to have your assets, the income from your assets, exceed your earned income or pay for things. So this is what we did with the cruise. We had our savings, and I'm going to actually load up a pre-recorded video here in a second. But we had our savings, and at the last minute, I said, you know, I don't want to, we've saved up for this, but I don't want to use our savings. I want to follow the blueprint I teach everybody. Let's have the stock market pay for our cruise. So I sat down with my sons, who are 7 and 9 now. We started teaching them about money when they were 2. We started teaching them about investing when they were about 5. And so you'll see it's a longer case study I'm recording. I'm actually trying to record and document me teaching them about money because everybody kept saying they're too young. But I'm amazed. I'm still always blown away by how quickly they grasp these concepts. I taught them calls and puts last week. And randomly throughout the week, I was like, hey, if I want to make money in stock going up, what kind of option will I buy? They're like, call option. I'm like, wow. You know, it's just, anyway, I'm recording a longer case study. So I'm about to load a short snippet of us going through our charts. We picked some stocks. That was the first time I taught them about stock charts. They picked it up immediately. They picked the trades, and I wound up placing the trades that you see right here. And these are called our cruise trades. So let me load up that video, and I will be right back. Hey, this is Trader Travis, and I'm here with my sons. We're actually in the process of looking at some stocks to make some investments because we're trying to go on a cruise. So I told the kids, hey, instead of spending our savings, let's see if we can get the stock market to pay for our cruise, and let's make some investments, see how much money we can raise, and then we'll know how much we can spend on our cruise. So what I'm going to do is just talk through, pretend like the camera's not here, just go through our usual investing lesson with my sons. So boys, what I have here is we don't talk about stock charts much. Noah has seen stock charts, DJ, because he gets up in the morning sometimes with me when I'm going through this. So this is what, let's pull up one of the stocks you guys buy. So this is Disney. This is Costco. Let's look at Costco. So this is a stock chart of Costco. So it shows the prices of Costco every day, every month, every week. So as Costco, looking at this, no one knows what this is, but DJ, looking at this, does it look like Costco went up in price or down in price? Okay, so yep, it started down here at about $120. Now it's at $243 a share. It's pretty cool, huh? All right, so what we're going to do is, this is what I call, it's gonna be a funny term, I'll call it a naked chart test, right? What we do is we look at a chart, we don't put anything on it really. I have these little triangles on here, this tells me when to buy and sell. But basically, we're gonna look at a really basic chart. I call it a naked chart. It's like having no clothes on, right, to distract us. And you're gonna pick which stock charts you look. All of these I have pulled up are all companies that are making money, right? They're all doing well, right? So you tell me, do you like the way this stock chart looks?
Yeah.
Okay, so is this one you want to make an investment on?
Yep.
Yes or no, Noah?
Yes.
Okay. All right, so we're going to keep that one. This is Disney. This is a 5-year, bless you. Bless you. So this is 5 years, right? This is what Disney has done in 5 years. Do you want to make an investment on this?
No.
Okay.
Yes.
Yes? Why? Okay. It's gone up a tiny bit. DJ says no. Why no, DJ?
Because at the end it's like lower than this, which is supposed to be a good progress.
Okay. A good what?
Progress.
Progress. Okay. Well, all right. I see what you're saying. So you're looking here and you're saying it's lower than where it was back here in June. Noah's looking here and saying, hey, it's a little bit higher. So unless you both can agree on it, we're not going to make an investment. Both of you have great points. Both of you are right. So what I'm going to do is X off at Disney for now. We'll come back to Disney later until Disney is a yes for both of you. Make sense? Okay. Okay, so now what we're going to do is move on. We looked at Disney. Both you, well, one of you said yes, one of you said no. We're going to keep Costco. So this is Starbucks. Y'all want to make an investment on Starbucks?
Yes.
No?
Yes.
Why?
Because this is a lower than this, and this is at the very top.
And then Daddy's already looked them up, like I looked up and see if they're actually making money. Hey, Isaiah, are you okay? Okay. That's our 3-year-old. I got to check on him. He's a little quiet. Could be into something. Okay. So, McDonald's. This is a stock chart of McDonald's. You want to make an investment on that?
Yep.
No? You have to
Yes.
give me a verbal yes or no, okay? All right. This is DIN, which is Applebee's. Yep, you know the stock symbol. So, do y'all want to make an investment on this?
No.
No. Okay, so you both said no. And why is that? Why do you say no?
Because this is almost the lowest, but this is.
Yeah, so we're going to wait a little bit. Come back to see when they're doing better, right? Okay. All right, so let's get rid of that. And this is Nike. Nike is a company that makes shoes.
Ooh, I like my shoe.
You want to make investment on this one?
Yes.
Okay, I'm just going to let you guys pick, and then I'm going to make the investment later and show you how it did. Okay, and Home Depot, where we buy stuff for our house.
No.
No? Yes or no?
No. Yes.
Noah says yes. DJ, you say no? Okay, I like this one, but DJ says no. Hey, unless we all say yes. And I like the ones you both say yes on. So we'll get rid of Home Depot. All right, so these are the ones I'm going to make investments on. Visa, Adobe, Microsoft, Lululemon, Nike, McDonald's, Starbucks, and Costco. Okay, now I want to end with a bonus lesson for people. I'm going to pull up Charles Schwab, right? Because you guys, DJ, we started teaching both of you about money when you were 2 years old. And DJ, you remember saving up your money? And what did you buy with it?
A bike.
Yep, you saved up your money and you bought your first bike on yourself. We have a picture of it where we took you to the bank and you put in all your little coins in the machine and we got your money out and you bought your own bike. So you guys started learning about money when you're 2, but do you know there are people in the world who don't think kids can learn about money at 2?
Yeah.
They don't think kids can learn about stocks and things like that. They say, you're too young, wait until they're older. And so me and your mommy were like, well, we believe you're smarter than people give you credit. And we think that you can do better. We think you're smarter than adults realize. Okay, so we started teaching both of you about stocks when you were like 5 years old. So you remember that, Noah? Show you all that money on the counter, that video?
Yeah.
You guys' eyes got all big. All right, so I'm going to record you guys buying some stocks without me telling you, right? And then to show people that, hey, kids can learn how to do this. All we do is pull up our computer and we tell you all to buy a couple of shares. You do it on your own. All right, so who wants to go first? DJ? Oh. You want to go first, Noah? Let's see. Well, DJ spoke up, so the aggressive person gets the worm this time. So you got to be more aggressive and make sure you speak up next time, okay? You're going to buy some too, so don't worry about it. All right, DJ, I want you to buy, which stock you want to buy?
I'll buy.
Of the 5, Starbucks, how about this? Sorry, Starbucks, Costco, McDonald's, Disney, or Applebee's. Which one are the ones?
Starbucks.
Okay, I want you to go in and buy 1 share of Starbucks.
Okay.
Hold on, let me get rid of this notice right here. Sorry. Okay, now go in and buy 1 share of Starbucks. Don't look at me. I can't tell you anything. I just want to show people that you can do this on your own without any instructions from me.
We ordered. Everything looks good. Alright.
Okay, now, Noah, your turn. Which one you want to buy? Costco?
Applebee's.
Applebee's? Okay, you go in and buy 1 share of Applebee's. And Noah is 7 now. He learned how to buy stocks when he was 5. DJ is... Isaiah, no snacks right now, okay? We'll eat snacks in a little bit. Can you close that? Well, I'll make you lunch in a second. Mommy's on her way home, okay? Why are you looking at me? Mama, I can't, I shouldn't help you. Does that look right to you?
Yeah.
Okay. All right. So, hey, high fives. Okay. You're, how old are you, Noah?
7.
And what did you just do?
Trades.
Yeah, you bought stocks. You bought a share of Applebee's. 7-year-old bought a share of Applebee's without his daddy telling him what to do. You proud of yourself? I'm proud of you. High fives.
Ow.
Sorry. What? What? It hurts?
Hurt.
Okay. All right, Isaiah, you want to say hi to everybody? Little snack master. Say hi to the camera. See the light. Sorry. Say hi.
Hi.
Little snack master trying to eat while we're recording. Okay. All right, boys. I just want to show everybody that you can buy stocks on your own. That kids can buy stocks. Hey, you want to wave to everybody? Tell them to subscribe to the YouTube channel. Hit like.
This isn't mine. This is
All right. Y'all take care. See you in the next video. Bye.
mine.
All right, I am back. So as I stated before, these are the trades or the stocks they picked. I bought a mix of call options. Well, they were all pretty much bullish trades. So here's our first round. We made 1,200. After that, I said, hey, kids, we made 1,200. Cruise is almost paid for. I'm thinking, can't remember exactly. I think the cruise is only like 1,400, but we wanted to do excursions and things like that. So I was like, well, the cruise is pretty much paid for. What do you want to do with the profit? You want to take it and run, reinvest it, things like that. So we all voted. It was kind of half and half. One of the sons was scared to lose the money because I was like, if we reinvest it, we can compound it and make more. The downfall is you could lose what you've made. So it was literally 50-50. One son was like, reinvest it. He was all, I want to make more. The other son was like, no, I'm scared to lose it. I was like, that's so typical, right? That's human behavior. So I was like, all right, how about we meet in the middle? So I went in and reinvested it, but I bought insurance. And so that was my compromise because we couldn't decide either way. Downfall is we did lose money. We lost $200 on the reinvestment. And that's what I told him. Sometimes it doesn't work out. We still walked away with a profit overall of $1,000. But I also, in addition to placing the 3X growth trades, I place some income trades, some cash flow strategies. I won't cover all these same exact stocks. I diversified strategies on the same stocks. Those trades brought in $3,900. And of course, just like I teach in the Success Academy, I bought insurance on these trades. And so just in case the market crashed on us, we would have had insurance to offset what we lost. So even with my loss on my insurance, grand total was $3,300. So our cruise is paid for, our excursions are paid for, our rental car is paid for, flights and hotels are free because we use credit card reward points. But that's it. That's the model we follow. We risked savings. Again, I wasn't willing to lose all of it. We had an acceptable amount. I said, if this doesn't work out, kids, we need to figure out when we're going to cut this experiment short. So we had that in mind. We never had to cut it short, and the cruise is paid for. So Peter, that's your encouragement for you is you don't have to be as risky because this was about a month's time frame I did this. So you don't have to be as aggressive as I was. So you have several months. We only had a month. We booked a cruise and then at the last minute I decided, let me see if the stock market paid for it. So, but if you have 6 months, this is ideal. So you can spread it out.
Right.
Try to pay for it over 6 months. All right. Now, so that's that. And lastly, I will end with this. The option profit formula is, in addition, used to pay for cruises, which you just saw. That formula is how I paid for my wife's engagement ring also. It was Visa's particularly. I remember Visa allowed me to earn enough money to pay for my wife's engagement ring. But the option profit formula is also used for your living expenses. And that's ideally what I use it for. So I have this money machine blurb here because I tell people, you could use one stock for your own personal money machine. And so here's a scenario, the lead in, so you can kind of understand where we're going with this. If a stock pays a 2% dividend, if you buy the stock for 100, then the dividend represents a 2% return on your investment. It's technically called dividend yield. All you do is just divide 2 by how much you pay for the stock. But if you buy that same exact stock for $50, your dividend yield goes to 4%. So that's why I only like to buy stocks during market crashes. I'm getting the same dividend as everyone else, but I'm buying it at a cheaper price and I'm getting paid to do it. I don't have this as an example, but I'm getting paid to do that. So I double my dividend yield just by being a little more patient and strategic than everyone else, or the buy and hold people, because they tell you the dollar cost average, whatever. Anyway, if I finance some of the purchase of that stock from profit from other trades, I bring my cost basis down even more. So let's say I've accumulated profit over 3 or 4 years. I buy the same stock for 50 during a market crash. 30 of it is profit from other trades. 20 was my own money that I've worked hard for. Now that same $2 dividend represents a 10% return on my money, right? So that's the goal of our family money machine. We're trying to earn 10 to 15% in passive income each year. And passive means we don't physically work for the money, because I teach my kids, you only want to work for $1 one time. If you cut grass, you earn $1. You don't want to have to work for that dollar again, meaning that you don't want to spend it. You're broke and you have to go back on the treadmill, the rat race, to earn another $1. I'm like, nope, you put that dollar in your money machine, let that money machine produce dividends, income. Then you're getting paid from that dollar over and over again for the rest of your life. And again, as I stated earlier, eventually the passive income will exceed your earned income, and that is what we call financial independence. End the lesson. That's all I have for you this week. Anything else you have to say, Peter?
Real quick. There's only one quick thing that I wanted to just kind of go, because we tend to get a lot of not a lot, but every once in a while we'll get questions or objections. And
Yeah, that's fair.
here's the easiest thing I can tell you. If you have any objections to what Travis talked about, or even I talked about, that's something you have to figure out. It's not something I have to figure out for you, because any objection you have to whatever system that I'm using or any system that Travis is using is your objection, not ours. We've already figured out those objections. We had them too. We had those objections. I had the same objections you're probably thinking if you're watching this for the first time, or if you watched this for a couple times and you're saying, yeah, but Travis, if you have to wait for the stock market to go down to buy it, then you're missing out on dividend payments. Well, Travis has already figured out how to overcome that objection. So the bottom line is that's your objection. So just understand that. I don't ever want to tell someone don't question something. Always question,
For sure.
always test the theory, or this isn't a theory though, but question it by all means. But understand those are your objections and your questions that you probably have to figure out, because we've already done it. We've already figured it out. Travis just showed you how he's taken all this personal money machine blurb here. He's been doing this, and he's been doing it for many, 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 many years. And I've been following him for many, many, many years. And I can tell you that, one, he taught me how to do it. So I've overcome those objections and those questions, and they work. So just be cognizant of that you're going to go through any system you go through or watch, you're going to have some kind of question or objection to it. You have to figure out how to overcome that, because we're not telling you something we're not doing. We're telling you something we are doing. So, my testament hasn't been as great as some of the other students because I've been lazy. But I finally got more. I started treating my trading more like a business. So anyway, I know that was a little bit longer than I wanted, but just something to keep in mind. If someone's giving you a great opportunity and you have objections or questions or any kind of obstacle that's holding you up, you've got to figure out how to overcome it, because the person giving you the advice that is following that advice already figured that out for you. So you just have to either follow them or figure out how to overcome the objection or the obstacle.
Yeah, that's a good point. Two good points. You could spend 20 years figuring it out like I did, or you could just join the Success Academy and get the blueprint, in a matter of minutes. So those really are your choices. And I'm biased, but you could do either one. You both get to the same end result. It just depends. You want to get there in 20 years or 20 minutes. Two, treat it like a business. Just 10 to 15%. What I didn't say is it's not get rich quick. It doesn't happen overnight. It happens over time. Like any business, you're building up a business. The goal is to get to 10, 15%. You're not going to do it like next week. So like Peter says, he's been following for years. Yeah. And it takes years to set up this money machine so that, the passive income eventually exceeds your earned income, but it's not going to happen overnight. You just keep your eyes on the prize. You keep plugging your money to it. And then one day you'll look up, you're like, wow, I overestimated what I could do in a year and underestimated what I could do in 3 years, Right. So just like the 10-minute retirement trader, started with 10 grand. I have that Excel pulled up. Okay. I started with 10 grand. Wrong. Like it's like $300,000. Whoa. All right. So I started with 10 grand 2 years ago. Right. So 2 years later, it's now quadrupled in price. See, I wouldn't have, people probably would have tried to do that in a year. I'm going to triple my account in a year. Possible, not likely. But they underestimated, just with a diligent process of following option profit formula over time, what they can do. I would have never imagined, and previously to doing this, that I could have quadrupled account in 2 years. But see, I'm doing a case study. I've already done this, so I know it's true. I know it's possible, but it's hard getting people on the sidelines to buy into that vision, because everybody wants it. Not everybody. A lot of people want it overnight, and it doesn't happen like that. It happens over time. So this recap has already been long enough. So we're going to end with that. We'll see you next week. No. I told you I'm going to do most of the talking, so I knew we were going to run over, but I'll see you next week. The recap may be posted late. I'm going to be on the cruise, but I'm still committed to showing up. I'll log in from my phone. I'll just drop in for a little bit. Peter may mainly take the floor. And then depending on the internet, I may upload next week's recap a day or two late, depending on when the boat docks and I can get decent internet. So if there's a delay in next week's recap, that's why. I'm on the cruise, paid for via the stock market. So you all take care. See you next week. All right. Bye-bye.